What's going on, everybody? Welcome back to another episode with Ticker Feed. So, we're going to go ahead and get started. What are we going to be talking about? We've got Biden just put out an executive order on cryptocurrencies. Here's everything that's in it. So, what we're going to be discussing is what are those lagging and leading indicators when it comes to the stock market in general? What are those current events that are affecting your stocks, right? And again, that could be your options, your individual stocks, your mutual funds, whatever the case is. These are going to be factors that are going to affect it in a positive or negative way. It is what it is. So, again, we're going to be talking about what Biden just put on the executive order. We're going to be talking about Amazon. We're going to be talking about the airlines, a few other things. So just hold on and just be patient, guys. I really do appreciate you listening to this. So let's go ahead and get started. Again, so Biden just put on an executive order. So what is that? Here are the key points. Joe Biden signed an executive order on Wednesday. Okay, so that was just yesterday if you didn't hear about it, calling on the government to examine the risks and benefits of cryptocurrencies. The measures focus on 6 key areas: consumer protection, financial stability, okay, illicit activity, U.S. competitiveness, financial inclusion, and responsible innovation. The Biden administration also wants to explore a digital version of the dollar. Now, I feel like that is what you call a lagging indicator. What is going on? It's been a while. Okay, so he signed it on Wednesday. Just like it says, it's a long-awaited directive that had the crypto industry on edge, not least due to the growing regulatory concerns around the world surrounding the digital asset market. Now, keep in mind, from my understanding, this can be a really positive thing. Leave a comment down below if you agree. Now, there's been reports of a divide between the White House officials and the Treasury, okay, on the delay in the policy rollout, which is not a surprise. Now, I don't think they're going to understand cryptocurrency compared to the individuals that has built the platform, the user face, and all the individuals that have been purchasing this cryptocurrency, right? This entire industry or sector itself. And so there is going to be a lag on the White House. Now, the crypto market got wind of the executive order overnight after the Treasury accidentally put a since deleted statement calling it historic and releasing some of the details ahead of time. Hint, hint, wink, wink, innuendo. So the order was finally signed Wednesday. It calls on federal agencies to take a unified approach to regulation and oversight of digital assets, according to the White House fact sheet. Okay, so again, what their main concern is, and I can tell you what my thought process is: protecting consumers. So the 6 areas, just like we talked about: consumer investor protection, which that's what they're going to be telling us when it comes to providing that information as to why they're doing it. Financial stability, illicit activity, U.S. competitiveness on a global stage. I think there you go. You can circle and underline and bold that one. Financial inclusion and responsible innovation. Guys, it's all about monetary value at the end of the day. Is there something in it that they can obtain? They do want to be able to capture that when it comes to taxes. I mean, just think about it. Now, that's my own personal opinion. I am not a financial advisor, but just by reading this, this is what comes to mind. So it says protecting the consumers, so on and so forth. So let's go on to the next big event. Now, if you didn't hear, when is the Amazon stock split date? What will happen to Amazon stock? Guys, it is all about the 20-for-1 stock split. Now, they've done this 4 times since 1997, which is pretty interesting. So the stock shot higher in after hours, trading on some big news, following the footsteps of the other Silicon Valley giants. The e-commerce company said it would enact a 20-for-1 stock split. So just like when Tesla did, I believe sometime in 2021, maybe third quarter of 2020. Either way, it was huge and many people bought into it and it worked. Now, fast forward, stock splits are not entirely uncommon. Just like Google, they announced their own in February 2022. If you remember that, companies can break up higher price shares, ultimately making them more accessible to investors. It's just like, without having to do it, if you've ever heard of Berkshire Hathaway, there's Berkshire Hathaway A and Berkshire Hathaway B. So A's roughly around $430,000 per share, and then you've got Berkshire B. Okay, so roughly around 330. So instead of having two different stocks, you just have one, you split it, and more people can afford it. That's major news. Now let's continue. Elevated inflation settles in for the long run. So currently, if you thought the 7.9% annual inflation numbers for February's consumer price index, right? CPI, which I'm sure you've heard not only from other YouTubers, but just in general on the television across the US economy, signs are emerging that the surge in prices is far from over. So Putin's brutal war in Ukraine has driven the average price of gasoline above $4.50 a gallon. Just like in my last video, I was talking about $3.99 and now it's $4.50. So it half xed already, and I think, I think here soon it'll probably hit close to $5. If not, if it hasn't already, I'm gonna have to get gas here soon. So inflation could hit 10% if energy prices continue to rise. Now, according to Bloomberg Economics. Now, leave a comment down below because here's what I've actually heard. We actually have some pipelines going from North Dakota all the way down to Texas that was stopped by the political atmosphere. And so we have been having, we've had to collect or receive imports from various countries in order to continue. And by doing that, everything has skyrocketed. But what I've heard is that if we actually quit the imports and open up that pipeline, you'll actually have we'll actually receive more barrels than what we would have got from imports, and it would be coming from us, and so the prices would drop. Leave a comment down below if you've heard anything about that. It's kind of interesting. I'm not 100% sure, but that's what I've heard. So leave a comment down below. Let's keep going. Now, U.S. extends airplane mask mandate through April 18th. The mandate was set to expire March 19th, and the short extension suggests that the U.S. is considering lifting the mandate this spring. So the Transportation Security Administration is extending. Again, the mandate was to expire on March 19th. So an extension of the mandate comes from the Biden administration, cities, and states that rolled back mask mandates and other pandemic policies elsewhere as COVID cases drop. And that sounds kind of ironic. Leave a comment down below as what you think about that, and if you've had to take any flights here lately. Okay, so the last thing. Which companies aren't exiting Russia? Big Pharma. Okay, so even as the war in Ukraine has prompted an exodus of international companies, from fast food chains and oil producers to luxury retailers, from Russia, US, and global drug companies. So airline, automakers, bank, technology giants, at least 320 by one count, are among the business curtailing operations or making high-profile exits. Okay, and some of those are going to be, for example, McDonald's, Starbucks, and Coca-Cola announced the pause in sales this week. Now, that's a major deal specifically for McDonald's. I heard, and what I've read, and leave a comment down below, that McDonald's has over 60% of its international McDonald's locations were in Russia. So leave a comment down below if you've heard anything about that or seen anything. So apparently, for example, Johnson & Johnson, which has corporate offices in Moscow and various places in Russia, said in a statement, "We remain committed to providing essential health products to those in need in Ukraine, Russia, and the region in compliance with current sanctions and while adapting to the rapidly changing situation on the ground." The reluctance of drug makers to pause operations in Russia is being met with growing criticism. So pharmaceutical companies that say they must continue to manufacture drugs in Russia for humanitarian reasons are being misguided at best, cynical in the medium case, and outright deplorably misleading and deceptive, according to this analyst, a professor of the Yale School of Management. So that sounds objective, not objective. Leave a comment down below if you hear anything about that, as that individual is sitting there and they're not relying on consumers and people to consume their products. So again, guys, thank you so much for listening. I really do appreciate it. Until then.